everyone, welcome to Real Estate Talk today. My name is Jeffrey Infante and I'm here with my partners, Josh DeBrossard and Clement. And as you guys know, we always have a special guest with us, Yonatan De La Cruz from BayCoast Mortgage. How you doing, Jonathan?
Good, how are you, Jeff?
Awesome, good to have you with us here today.
Thank you.
And Jonathan, as we go forward with all this, I mean, we like to educate the folks that are watching and let them know what's going on in the market, right? Because everyone, likes to be in tune with the real estate, what's going on. And I know today we're going to get into a little bit about what's going on with the interest rates. So, that's going to be the special sauce, I would say, of today's topic. But tell us a little about yourself. I know the company you work for, if you want to just have the consumer who's listening kind of know a little bit about yourself.
Yeah, definitely. Thank you. Thank you, first of all, for having me here. Yeah. I appreciate it. I've been in banking for about 15 years now. I've done commercial, I've done retail, and I'm in the mortgage area with BayCoast Mortgage. With BayCoast Mortgage, I've been 6 months, but doing this, and when I say doing this, it's I think about what I'm doing is helping families and helping customers.
Right.
My motto basically is always trying to help that customer get to where they need to be, right? Financially, if it's through home ownership, or if it's just like in general financial education. And that's a lot of what I do.
Nice.
A lot of what I do is actually helping those people out there trying to buy a house and how to get there and guide them through the process. So for some people it can be scary, it's a big step. So I pride myself in try to do the right thing for them and try to make it sure.
Absolutely. And I think that, having that education part of it becomes essential, right? Like you said, that people are, they get scared. It's the first time, right?
Yeah.
So here you are, you give them the knowledge, the information, so that way they can feel a little bit more comfortable, right? Going through the process, as versus like, I don't know what I'm doing, right?
Yeah, and to give you an idea of why I'm so passionate about that part of it and then the education piece of it for my customers is because when I was in retail as a branch manager, I got a lot of people coming to me with questions. Can you explain this? I don't understand that. Why my interest is this and why not? So I started to kind of get into that and helping people understand the terms and all that. And I'm like, if I get the chance to do that, I want to make sure people understand what they're getting into.
Right.
So that's why awesome. I'm so passionate about making sure they really know what they're doing and helping them through the process.
You know what? I think nowadays, I think a lot of companies, banks, have lost that touch of really being passionate, right? And that goes for any industry, anyone in general, right? You got to be passionate for what you're doing. If you don't have a passion to serve people, then you shouldn't be doing it, right? And that goes far, right? Because like you said, you were there helping people probably that wasn't in your area, let's just say, right? I mean, you were kind of going above and beyond where they could have gone to the teller or something, asked a question, or I'm just saying, just kind of throw it out there, just throwing it, just putting into perspective. And they're like, oh, well, I don't got time for you right now. Shut the door, I'm just doing my job. That's it, right?
Sometimes it's complacency too.
Right.
I've been guilty of it. Hey, your offer got accepted. What am I doing? They're excited. I should match their energy. But I do it so often that sometimes it's like, hey, your offer got accepted.
Right. No, you're right. And you know what? And it's good to step back. Like yesterday, one of my clients, her offer got accepted. She was crying, literally crying. She was so emotional. And I was with her there, you know what I mean? And I was we're on the phone and sharing the excitement and, and being the cheerleader, you know what I mean?
Were you crying too?
Yeah, I was crying too. I did the fake one, So I put little eye drops on, look, I'm crying on camera.
The cry emoji.
There you go. So, all right. So a lot of stuff has been going on. There's been some changes now. I know you're going to demonstrate a little bit about your products that you have and all that good stuff, which we want to see. And before we go into that, what separates you, BayCoast, from other companies that are out there? I mean, there are tons of them out there. I mean, I lost count. So, what
It's
separates
true.
you
It's
that
true.
you just say, okay, I'm gonna work with Jonathan? Like, what separates?
Well, first of all, we have a lot of great people, and I think everything starts with having really good people working for the company, and a lot of my colleagues are as passionate as I am to do this. So that's something that definitely makes a difference. But also, the company, it's part of BayCoast Bank, which has been in business for 170 years. So it's been in the market for a long time, 170 years. So, and right now it's expanding. We recently opened branches in Providence, in Bristol. The bank is expanding, and the mortgage company as well, hiring more people. So, which it's great. It's great to work for a company that not only has been established for a long time, but also is looking to continue grow in the area, but it's keeping that community banking feel, which is great.
That's
Which
all
is
I need.
really, really good. And we are a full service lender. So we have all the products, FHA, we have the first time home buyers, we work with the USDA program, the veterans. We have all the programs, but we also have our portfolio programs, which is program that we created for those borrowers that don't necessarily fit into the conventional financing.
I think we could show a slide on that.
Yeah, definitely.
So I think we could see that
And that's
of the products that you guys are offering.
correct. And at the bottom, like you said, for people that are looking for something less conventional, maybe like a regular conventional program wouldn't fit into their guidelines, we have our portfolio programs, which are created by the company, which are own guidelines. And a lot of times we can fit people into those programs. We will be able to help them get the financing they need when they cannot go to other places to find
Nice.
that. Yeah.
So now, talk to me a little bit about the portfolio loans. I mean, what can you tell me about it? Because someone that's hearing this, like, what is portfolio loan,
Yeah.
right? Elaborate a little bit on that.
All right. Thank you. So yeah. So, like when you go to get a mortgage loan, you have different options, and all of them have guidelines by the investor who's at the end of the day who's gonna buy that mortgage loan. And a lot of people, to put it in terms that people can understand, that's why they see their mortgage lender changing every so often, because they keep selling those loans. And those are particular guidelines that people have to fit into that. But let's say you're buying a property and you don't necessarily fit into those guidelines. So for example, let me give you an example of a program that we have. We have a first-time home buyer program for those borrowers that are looking to purchase a house for the first time. They have certain income limitations. So we created a program for that. There's other programs out there, FHA, there's other, Fannie Mae have a program for that. But if they, for some reason, don't fit into one of those programs, we can always look at it if it makes sense. Also, sometimes people buying properties that the property itself wouldn't qualify for one of those other programs, we can still look at it if it makes sense. So what we do is try to do financing that makes sense for
Right.
people. If it makes sense, we're gonna take a look, and if we have a program for that, if it doesn't fit into a conventional and we can do it under our portfolio with our own guidelines, we'll look into it and we'll see if we can work with a borrower to get it done.
Oh, it's just a little bit more flexibility with those
Correct.
products. Nice.
Correct.
That's pretty cool. That's pretty cool stuff. I'm going to have one more question for you, and then I know Jenny and Josh have other questions they might want to ask as well. So we've been hearing it, and we actually been seeing it. The interest rates now are starting to climb up now. And I don't know if you have a slide for that as well that you want to present.
I have an example that they can put on the slide, and I don't want to talk about why the rate are going up or
Yeah, we don't gotta get into it.
like
It's just the way-
exactly. It's a lot of
It's
technicality.
the nature of the business. It's just the way it goes. The market.
Correct. But I just wanted to show the difference it makes for like somebody that's making, $60,000 a year, like a household making $60,000 a year, that has approximately $2,000 available to make their mortgage payment. How an increasing mortgage rate environment will affect that family to purchase a house, right? On the first scenario, like let's say if the rate were 3%, which they recently were 3%, not too long ago, they could afford, and the only thing I'm changing is the interest rate. Let's assume that that's how much they can pay regardless of the interest rate. That's the max I can pay, right? 2,000, that's, Right. So if the rate are lower, you can afford more house, basically, right? Let's say in that, for example, 3%, you can purchase a house of $320,000, right? Yeah. But if the rate continues to go up, like 3.5, for example, now you can only afford 300. Because guess what? The payment's gonna be the same, but because the rate is higher, now you can afford less house because now you have to pay more interest rate, right? And if that moves to 4%, now if your payment's still the same, now it's $285,000. So now you can afford less house. So basically, in an environment like this, even though like we move to a more of a purchase market versus refinance, just because the rate's not gonna be as low as they were, even though we're still good. Like the rate's still like 3.5. It's around that, like an average borrower with like a average credit, and it's probably 3.5 you could be looking at. But if it continue going up, it's gonna affect how much you can borrow. So is this the time? Well, yeah, you have to determine when is the right time for you to buy, but just know that the rates are going up.
And Jeffrey and I, we had a conversation the other day, right? Because you had a situation, the same situation. So if you guys are already approved from like a couple of months ago, just make sure you talk to your lender. Because now it might change.
Exactly. Especially for those that are pre-approved looking for houses. If they were pre-approved, you're right. If they were pre-approved a couple of months ago, now they may not have the same rate. Like when you're pre-approved, the rate is not fixed, right? They tell you right up front it may change. And it will when you finally find the house. It's based on the rate of that day. So make sure you do that.
And that's another thing that I want the folks that are listening is that when they give you a pre-approval based on a certain percentage, that percentage is not locked in. I had a lot of people come in and they say, hey, I got a pre-approval. This is my interest rate, 2.8, right? And then when they find the house 3 months later, that interest rate has changed because it adjusts. It's like 3.4, and then they're like screaming and complaining, oh, you gave me this approval at 2.8. Well, it's good that you guys understand that that's not an official interest rate until it is locked.
Correct.
So once you find the property, right, and you go through the process, your mortgage lender locks the rate, correct?
Correct.
And that's your interest rate.
Correct.
That's the actual interest rate.
Correct.
So that may affect your pricing a little bit based on that conversation you had 3-4 months ago, because now it's taking longer to find a property now because of the low inventory. So now it's taking 4, 5, 6 months for the person that's looking for that right home, right? And by the time they lock, interest rate's completely different.
I think we should explain to the listeners. So obviously they can't lock the rate till they find the property.
Right.
So can you just explain a little bit how that process is? Like, okay.
Yeah, and actually I was gonna add a little bit to that, because the locking the rate is for a certain period of time. So for example, if you lock the rate for 60 days, it's with the expectation that you're gonna close on those 60 days, right? If for some reason you don't close on those 60 days, you have to extend the rate.
And that's a charge for that. There's a fee for that.
And there's a fee for that. So that's why you don't lock the rate until you actually already found the house and start the process. Now, locking the rate only means that the rate of that day, the rate that you're gonna discuss with your lender, that rate's gonna stay, like he said. That's gonna be the rate for your mortgage if you close within those 60 days or extend it, right? That's gonna be your rate. Now, another thing to what you mentioned is that let's say you're pre-approved for a certain amount at 2.5%, and then now a few months later, you're going back, oh, I found a house, and now the rate is 3.5%. You may not be pre-approved for the same amount. So if you were looking for the highest that you could qualify for based on that rate, as the example showed, you may not qualify for that house
Right.
anymore,
Right,
right?
right,
So that's why very important that you keep that conversation, flowing with your lender,
up to date.
because you want to make sure they know, what the process is. If you keep looking, if you continue looking for a house,
Right.
or if everything's still the same.
How long can you do a rate lock for?
Sorry.
How long can you do a rate lock for?
It depends. It depends. Each lender, it's different. You can do 30, 60, 120 days. It really depends on the circumstances, right? If you are doing a regular transaction, it shouldn't take more than 60 days normally.
Right.
So 60 days enough. Because if you do it for more, the rate may change too.
Now, what would be the pro or con? Why not always just pick the longest?
Because the rate may change. It may not be the same rate for 120 days than for 60, than for 30.
So that means that if you lock the rate 3% for 60 days, if the rate goes up, you're still paying the 3%.
Correct.
But if it goes down, you're still gonna do the 3%.
Correct.
So that's probably why they don't wanna lock it for that long, because
And there's an option where you can keep the rate floating. You don't have to lock it. But in an
taking a
environment,
chance.
correct. In an environment where the rate are going up, you want to lock it,
Like now.
because if you don't, then chances are the rate's gonna be higher when you
Right.
finally close.
So guys, lock your rates right now.
question, this is, do they charge you like the,
The initial rate lock.
Right.
That's what I want to know. Yeah.
yeah,
Yeah. No.
No, it's
only when you extend.
It's only
Only
if you
extend.
extend.
Oh, okay.
Yeah. No.
okay.
So it just really depends on what's going on with the market today. And so if we're predicting, and remember, it's predicting because we don't have a crystal ball.
Correct.
If we're making an assumption, better said,
Yep.
that it's going to keep climbing up, then we're going to take the opportunity to do the longest rate lock.
Correct.
I mean, if I was a lender, that's what I would probably do.
Yeah, and their situation, like if you know that your offer is contingent to the seller finding a house, and
Right.
there's no properties now, and
Right.
the seller may take a lot longer than 60 days, like why would you just, because then if you don't close in 60 days, remember you have to pay, and that coming out of the.
And to your point, I want to make sure that we say to the people, the listeners, is it's why it's important that you have a realtor that has a great communication with his lender, his client, and his attorney. Because when there's no communication there, when your realtor is making the suggestion that you work with his preferred client, it's not for any other reason but because of communication. I can guarantee you that.
Right.
Because when I know personally, when I have to work with a different person, and maybe they have a certain personality, or I don't hear from that person, or it's just tough when the communication isn't there. Whereas I can convey to them, so-and-so on the other side is getting divorced, or they're going through a process where they have to buy, or maybe it's an estate sale, things like that will be communicated over, and we can establish a better game plan for you and your purchase or your sale. So just keep that, guys, in mind, for
It's
sure.
trust, right?
Right.
Trusting your partner, trusting the
And
person
your
you
team,
work
the
with, and your team,
professionals.
the professionals, right?
Working
Yeah, so you trust your customer, we trust each other, and
Yeah.
we make sure we're doing the right thing for the person that's actually doing the transaction, so definitely.
Excellent.
That's good. So now, Jonathan, I know we talk about first-time buyers and stuff like that, but what about for people that already have their first home, they want to buy a second home? What's the process?
That's a great question, and believe it or not, I have talked to a lot of people that are in the process of doing something like that. Let me talk about two different scenarios, right? Like if you have a multifamily property, and this is a situation I get all the time. You have a multifamily property, and now you're in a position where you want to move to a single family. That's an easier transition for the family financially, because now you can technically almost follow like the first-time home buyer process of application, even though you're not gonna be a first-time home buyer. But if it's because of your family needs that you move into a single family, now that single family will become your primary resident, and now you don't have to do as much of a down payment as if you were buying an investment property, you know? So you can actually put down a little less, even though it's your second home, but because that one bill will be your primary resident, and the house that you're living, which is a multifamily, will automatically be technically your investment property because you're no longer gonna be living in that house, right? Now, if the situation is the opposite, where you have a multifamily where you live, and now you're looking to invest and buy a multifamily, you know, to rent out for investment purposes.
You mean you live in a single family?
Yes.
Okay.
Sorry, you live in a single family, that's your house, and now you're buying a multifamily. Now, in that situation, now you have to kind of prepare yourself for that, because it's going to be a bigger investment on your side, not because of how much it's going to cost, but more because of how much you're going to need to put down, right? Now we're looking at putting down, you know, more than 20% to buy the property. Now you're looking to have some reserves depending on how units you have, and you have to have that money in the bank just in case, because now you're going to be a landlord, you're going to have tenants and all that. You may not have that experience before. So there's a lot of other things that you have to consider before you do that step. And it's good to have that conversation with your lender, with your realtor before you do anything, just because it'll require a lot more from you, from the borrower, in order to get into investment property, as if you're going from multi to single, it's an easier process and like a regular transaction.
And that's why we like to, when we talk to our new clients and stuff, we sit down with them and we ask them, what are their plans for the future? And if they're planning on buying multiple properties,
Right.
you know, we always tell them to start with a multifamily first versus
Right.
the single
Yeah,
family,
yeah.
because we know that
Right.
if they go with a 3-family and then to a single family, it'll be easier,
Right,
and then
easier,
the
sure,
deposit,
sure.
the down payment is cheaper.
Right.
So that's why it's good to, you know, talk to them and
Right.
help them
Educate
figure out what they want to do for the future.
Right.
Right.
There's what do we call it? House hacking? Is that what it is?
Yeah. Well, yeah.
Right.
Yeah. House hacking. Yeah.
We can have a whole segment on that. We
Yeah. I
should.
know. Yeah. That's coming soon.
Definitely.
Yeah.
I'm going to kind of wrap up with putting the last two questions, if I may, into one. So let's paint a picture here. Let's talk about the application process, but let's say I'm a candidate with bad credit and I don't have enough to put down, but I want to start. What do I do?
I think that's where it comes the passion, right? Because if we keep this transactional, if you don't qualify now, some people will just tell you you don't qualify, your credit score is too low, your debt to income is too high, and you know, that's probably gonna be the conversation. In my case, I like to dig into the detail, into the why nots, right? Just because if I tell you, and you'll probably know, but if you didn't know anything about real estate and I tell you your DTI is too high, you probably
What is
wouldn't
that?
even know what I'm
DTI?
talking about,
I'm
right?
hungry.
What is it? DUI? You say DUI?
I just went to my doctor and he said I was fine.
So I try to explain really to the person in front of me what these things mean, right? Debt to income is how much you make versus how much you have to pay every month in debt, in your monthly payments, right? Credit cards, student loans, auto loans. So if you're not making enough to make your payment and on top of that get a mortgage, then you probably wouldn't qualify. Or if your credit score it's really low and there's late payment, things like that, collection. But what I usually do with my borrowers is explain to them what that is. And I'm even have the capability of creating a plan for them in when it comes to the credit score, creating a plan for them. This is this is what you need to pay it off. This is what your credit score, where your credit score need to be at, or these are the accounts that are giving you issues. Let's do this, let's do that. Every situation is different, and when it comes to credit, everybody have different issues, different situations. But it's the explaining, the help them understand what that means and how to fix it that I like to get into. And you may not be able to buy a house right away because, like I said, there's guidelines and there are things in place that will probably, won't let you qualify for one at the moment. But that doesn't mean you can't qualify for one in 6 months or even a year. I've been working with, I have borrowers that I've been working with them for more than 6 months. And it's fine. They reach out to me every so often. I reach out to them, how we going. Sometimes it's a saving plan because you don't have enough for a down payment. Like you said, you want to buy a multifamily and require you to have some money in the bank and you don't have enough. Let's create a plan. How much you can save every week. Let's do that. Let me help you. And I try to help with those things because it's not a no. It's not a no now, maybe. But let's see in the future. Let's see how long it takes you to get there, and we'll help you.
Sounds like the first step we need to do is just make that phone call to you.
Yeah.
Well, Jonathan, we'd like to thank you again for being here today. Very informative, and this is why we love doing this because it brings a lot of information and a knowledge base to the people who are hearing, and which we love. And again, thank you for joining us today.
My pleasure.
And guys, for those that are listening, I hope you guys enjoy this. Please make sure to subscribe to our YouTube channel and like, comment, and share the post. Spread the love with everyone else that needs to hear of this information. Again, my name is Jeffrey Infante and Josh DeBrossard and Jenny Clement here with Real Estate Talk today. Take care. Bye-bye.